So starting from the beginning really involves understanding the market that you're trading in and understanding the participants, because once you have a background and a perspective on who is involved in the market, you can kind of get your arms around what's happening in the markets and what are the driving forces, what is driving the supply and demand of any particular currency that you might be looking at. It helps you get a better grasp of why certain currency pairs are more volatile than other currency pairs. And that's the perspective you need to have on a fundamental level as a trader coming into the market, so that you're not surprised by anything that occurs, and you have a better idea of what time zones you should be trading in. For example, it is a 24-hour market, as you're likely aware now. What trading sessions make the most sense for you as a trader, where you can pop into the market and achieve what you're looking to achieve without taking unnecessary risks. Figuring out your trading MO is a very interesting time in your life as a trader. Once you discover that, you're really on the path to being very successful. And what they say about traders is, if you don't know any of your tendencies or your behavioral tendencies, the tradable markets will show them to you. So if you're at a point in your life where you're not really sure how emotional you are, or how emotions affect your decision making, trading will bring that to light, and that's interesting and illuminating in and of itself. But from a trader's perspective, when it comes to profitability, what it'll do for you is it'll help zone in on and identify the instruments, for one, that you should be trading, and the instruments that you should be avoiding, the market conditions that you should be avoiding, the amount of capital you should be putting into the market initially and on an ongoing basis. And all of those things will define your profile as a trader. And an important thing to remember when you come into the markets, traders often ask, from moment to moment or hour to hour, what should I trade? Should I trade euro dollar? Should I buy it? Should I sell it? There's no one answer to that question. And the great thing about trading is two very different traders on opposite sides of the world with completely different trading styles can be equally profitable. There's no one way to make money. There's no holy grail. And the sooner that you appreciate that concept, that's a relieving thing as a trader. You don't have to pin yourself into a corner or set unrealistic expectations for yourself in the beginning. The market will always be there for you. Money will always be laying on the table for you. It's important just to first identify what style of trading makes the most sense for me. And Forex Officials helps you define that. When it comes to your knowledge base, even traders who have been in the markets for years and who are millionaires or billionaires, one common theme you hear them say is they're always continuing to learn, right? The markets never change. Even if you're a very profitable trader month in and month out, that doesn't mean the learning ever stops. And what's important in the beginner stage is to develop a strong foundation in trading. So, I think it was Muhammad Ali who said even he was a beginner boxer at one point. So everybody starts from a certain point. That's no different from you to me to anybody else, but it is important to get a strong foundation. And at Forex Officials, we help solidify that for you. Our Master Apprenticeship program online does it for you. Our one-on-one coaching does it for you. Once you have that launch pad, which we can help you develop in as little as 1 to 2 months, now you're in a position to really confidently go after the finer points of trading, and our team here is here to help you do that. It is important not to freak out when trades move against you. A way to make that easier for yourself here as a quick tip is to remind yourself that every trader in the world incurs losses. Okay, there's some false information you can find online about traders who have won 50, 100 trades in a row, whatever the case may be. Let me be the first to tell you that is erroneous information, and you probably want to get yourself off of any website that is sharing that type of material. Losses are part of trading. The key is to be able to manage losses well. One thing that we remind traders at Forex Officials, and some of our best traders who will work with us, our most successful traders, will tell you, is that taking nice profits is just as important as managing your losses. And you don't need the bigger point there is if you can manage your losses well, it's very relieving to know as a trader that you don't need to win 90% of your trades. You don't need to win 60% of your trades. You can have a very modest winning percentage, even under 50%, okay? And this is what hedge fund managers and money managers around the world who have success will also tell you. And the reason they are successful is they don't put undue pressure on themselves to win every trade. If you do that, what that will culminate in is letting losses extend way too far, and then now you're trying to make up bigger losses with smaller gains. And it's the exact opposite. You want to flip that around. I know it's easier said than done. We have a lot of, in our coaching, we have a lot of strategies to help you actually implement that in the real trading environment. So again, don't put too much pressure on yourself to win every trade. Understand, remind yourself time in, time out, the best traders in the world, Warren Buffett's, George Soros, name whoever you like, they all take losses and they all tell you that themselves. It's an important point never to forget. It's just about managing those losses, and we will help you do that. Yeah, remembering the analog era and the concept behind that is very important as well, because it tells you that some of the key concepts or the key points of trading, if you can live by them, you don't need the minutia to be profitable. You know, nowadays, obviously, online trading has absolutely exploded. That has been a rising trend really since the year 2000. There's more traders coming into the markets, tradable markets online, year after year. That trend will continue. And alongside that, online trading platforms are becoming more robust. There's a lot more technical indicators on different trading platforms. And so there's a lot of detail that you can get caught up in. You know, sometimes the phrase paralysis by analysis comes into play. And if you go back to the analog era, what you'll find is traders back in the 1970s and 1980s, for example, had access to none of this information that traders now have today, none of these technical indicators, hundreds of technical indicators. Why were they profitable though? Why were some of those traders so successful? Okay, it's because they stuck to key core principles and they didn't abandon them. They had losing trades, but they knew how to manage them. They had winning trades and they knew how to let their profits run. That's a key concept that has not changed from 1980 until 2017. And so a big part of trading is also knowing what noise or what information to push aside that really will not materially affect your profitability. That's just as important as being able to identify the important items. And we will help you make that distinction. It'll save you time and it'll make you money.